As a founder that's raised, $40 million over the last several years for, a couple different companies, fundraising is, a full-time job, and it distracts from founders, focusing on building and creating value in their companies. So that's one of the main reasons that, I got excited about this opportunity was to solve the problem for founders. But then we kind of learned what's the problem that VCs have, because it's a two-sided marketplace effectively. And so, our technology enables them to be a part of those opportunities at the earliest point, to have their chance to get allocation and to great deals.
Welcome, everybody. I'm Mark Peter Davis, managing partner of Interplay. On this podcast, I interview innovators about their strategies, industries, and decisions. I am super excited about this week's episode. It hits very close to home. If you've listened to the pod before, you've probably heard me mention my passion project, a platform that helps democratize access to capital for founders, and that project is called Thunder. On this week's episode, I sit down with Thunder's co-founder and CEO, Jason Kirby. To give a bit more context, Thunder is a company that actually came out of Interplay's Foundry. That's the part of Interplay that builds companies from scratch. And Jason is the incredible CEO that we brought in to help build and grow the company. Now, Jason and I get into all types of details about Thunder and its platform during the chat, but at its core, Thunder is a platform that connects founders, VCs, and angels by utilizing a double opt-in, AI-based matching protocol that not only creates super relevant deal flow and connections for everybody, but really helps everyone save time by avoiding spam. We started this company with the mission of helping founders that lack strong networks raise capital. We wanted to democratize entrepreneurship. And Jason is a serial entrepreneur that has done an incredible job so far. Not only has he advanced the business, but he has advanced the vision. I believe this company is going to materially improve the way capital flows, not just in venture capital, but more broadly across alternative asset classes. I am so excited to watch what he's doing and to continue supporting him. The company just released a completely new front-end design, taking the product from basically an MVP to something legit. Also, they just launched a dashboard that shows investors all of the deals that apply to them for funding, ranking them by fit, and unearthing all of the key data points investors need to quickly make decisions. This should make everybody's life a hell of a lot easier. Be sure to check it out at Thunder.vc. During our chat, we talk all about how Thunder works, how it helps founders and investors, but we also dive deep into Jason's wisdom as an entrepreneur. He started a bunch of companies and has learned a lot of things. And he shares some great insights from everything around mental health to M&A. I hope you enjoy this conversation as much as I did. This episode is brought to you by Venwise. Venwise is a curated community of high-growth leaders. It's isolating being a leader, but it doesn't have to be. Through Venwise, you can join discussions and gain support from fellow C-level executives at high-growth tech companies. If you're interested, apply by visiting venwise.com. Jason, thanks for being here today, buddy.
I'm excited to be here.
Okay, let's start at the top. Do you mind giving us an overview of Thunder?
Yeah, happy to do so. So Thunder is a tech-enabled investment bank where we are focused on early-stage venture to make it easier for founders to raise capital from the right people and VCs to vet and catalog and analyze and rate deal flow faster than any other solution with our AI.
What's the problem we're trying to solve here? Why does this need to exist? I mean, the machine's working, right? The whole industry is transacting right now. Why build this?
As a founder that's raised, $40 million over the last several years for, a couple different companies, fundraising is, a full-time job, and it distracts from founders, focusing on building and creating value in their companies. And albeit it's a necessary evil to have in the as a founder, ultimately it comes down to founders spending time with the wrong investors. Countless investors will just take deal flow and they'll be like, "Oh, this is interesting." They'll listen to it and they'll keep they'll keep the door open, but not really actually be serious about the opportunity, leaving founders on the hook to kind of be like, "Oh, I'll make sure to follow up and continue that conversation. Maybe it's there," but in reality, it's like a 99% no. And so what we're trying to focus on is, rather than opening up the door to 100 VCs, we're trying to laser focus using our AI to identify, the 3 to 10 VCs that are actually going to be willing to cut a check for specifically what you're building. and having you focus your rifle shot on those VCs as opposed to a shotgun approach, which is unfortunately what a lot of founders do. Maybe they get lucky, but in a lot of cases they're just losing a lot of time and not being able to focus on their product. So that's one of the main reasons that I got excited about this opportunity, was to solve the problem for founders. But then we kind of learned, like, what's the problem that VCs have, because it's a two-sided marketplace effectively. And so what we looked at is a lot of VCs out there don't necessarily have deal flow problems, especially well-established VCs that have brands or have a following online in some capacity. But there's 2,500 VCs out there in the U.S. and more growing, more coming up into the the ecosystem every day. New emerging fund managers that don't necessarily have those connections and that deal flow, and a lot of VCs that are outside of the major markets where a lot of the deals are happening, but want access to great deals. And so our technology enables them to be a part of those opportunities at the earliest point, to have their chance to get allocation into great deals. And also our technology in itself, for VCs that have too much deal flow, we have the ability to process, catalog, analyze, and rate their deals to only bring attention to the best deals for them. Streamlining their processes and effectively acting as an analyst, saving everyone a substantial amount of time.
Okay, but let me pick that apart a little bit. There's a lot of VCs, I think, that don't want founders to know exactly what they're looking for. And the reason why is because they want to be opportunistic, right? So they've, I used to say every VC basically has the same website, right? They don't articulate nuances of their theses. And when you meet them and you chat with them, it's very clear many folks are investing in very different things. And it may not even be different sectors. It may be different dimensions of the business or strategies or types of founders. And those little nuances, once they come to life, they really do guide a bit of the matching in this game. But I think there's an argument for VCs where they just want to see all of it and be overwhelmed in order to just make sure they don't miss the one out of the needle in the haystack. How does that fit within the kind of Thunder framework?
And so I think that's what specifically separates us from what might be out there in the market already, where it's a lot of Boolean checklist type things that founders or VCs use to identify deal flow. Effectively, what makes us different and how we take advantage of that opportunity is a lot of generalist VCs is kind of the label I put on them, where they just want to see it all. We sit down with the VCs on our platform. We do anywhere between a 15 to 30 minute call to understand those nuances. To understand, do they just want to see the best deal that's hyper relevant to their investment thesis, or are they more of a generalist, or they want to see anything that could potentially be of interest? And so we take that into consideration and send them what they're looking for. And again, in some cases it's it's automated. In some cases it's a human relationship where we're looking through our deal flow, and due to our relationship with those VCs, we know what's going to pique their interest, what's going to get them excited, whether they're more of a early stage, team kind of focus, where it's less so much about the idea, it's more about the team, or, broad sector, focus where there's just general SaaS. We have the ability to identify what correlates with what VCs want and have that flexibility to tailor it specifically to their needs. For a lot of VCs that don't want a lot of deal flow because they feel like they have it all and they're doing whatever they got, we know that when we send that one email, it's going to get answered. Whereas some VCs that want to see a lot coming through, we have a dashboard for them to kind of navigate, sort, and filter, and do whatever they see fit. They can follow our scoring and rating mechanisms if they wish, or they can dive into the mix. We have hundreds of companies coming to the platform, providing their information, giving a lot more detail and insight than they would get, beyond just the deck and other things, to be able to kind of sort and standardize the information that it's important to them.
Now, I know you have a rating system. Can you describe kind of what the rating system does? I mean, I think there's probably an appropriate level of fear that your ratings will be wrong, right? For that venture fund, everyone feels to a certain extent that they've got a kind of a special lens for how they're picking their companies. And also they may not be looking at interested in the same deals as other people. So, a rating isn't a universal thing, right? Beauty is a little bit in the eye of the beholder. So how does the rating work for VCs?
So we have 3 scores. We have a company success score that takes into account a variety of different, variables, from what stage they are and what sector they're in, and depending on what sector they're in, what level of traction they have in relation to their sector and stage. That give us high signal, low noise on is this company venture backable? Does it have what it takes to, to get funded? And so that gives us our success score, which we use, Z-scores, kind of think of like a standard deviation from -3 to +3. It's the extreme outliers are the ones that we really focus on at least the ones that we double down on and make the intros for. Those, kind of 3+ type companies. So those are the ones we reach out and go through our due diligence process. We pre-vet them and highlight them on the platform and make the intros manually. But the rest of the companies, the scores effectively take into consideration the company score, the investor score, which is the investor's willingness and likeliness to invest in that particular company. So this takes into consideration of what fund they're on, how much capital they have left in their fund, what check sizes they write. Are they a lead? Or they don't lead? Do they like to occasionally lead or co-lead? So I take all those considerations in to factor in comparison to the company that's it's being presented against. And then we have a compatibility score that takes into consideration the what we call the secret sauce of the VC in terms of what they're specifically looking for, their criteria. Like I said, there's things to fill out and data to collect on the platform, but in those intake calls that we do with our VCs, there's that extra something special that we try to take into consideration. Either we populate into the model or we just have it as notes on the side. So before we make the intros, we reference that to make sure it's going to be aligned with what they're looking for. So all three of those scores effectively go into what we call a simplified match score. And that's what's published on the website for VCs only. So companies don't see any of this information. Companies are not allowed to start reaching out to any and all investors. We give the investors the control of who they want to interact with, if they want to take action on the platform, or they can just sit and wait for us to send them the email notifications and the direct kind of validation or recommendation if they want to move forward with a company or not. So that's how the scores work. It takes in, right now, it's about 85 different points of data, both first party and third party data from other sources, to basically populate those scores.
So when this started, it was simply just a game of, is the company in the right sector, stage, geography, et cetera, the basics, true or false for this investor match?
Yep.
And you've taken it to the next level and built this whole algorithm, right? So now these scores are the rating of a company for you as an investor, for each individual person. It's kind of this personalized recommendation engine. What kind of math and technology is going into making those scores work? Because what you're describing, the reality is I don't understand it. It's too much data for me to crunch in my head, right? How do you get all those inputs to jive in a way that actually yields something that's useful?
So for that, I have to bring in my partner, our chief data scientist, Matt, who's a PhD from Columbia in behavioral data science and doing his postdoc at Princeton right now. In terms of the data that we collect and how it's processed, I would probably butcher it if I try to go into the models that he uses to weight the different characteristics. So it takes into consideration both human intelligence, both from VCs in the market in terms of how things are weighted over others, and then it takes into consideration third-party data inputs that are trained from taking Crunchbase data in terms of what makes companies successful, from historical data that's able to be captured from there in terms of past funding rounds and public information that's available in other sources to identify trends that happen in different sectors. So it's a pretty convoluted and complicated model that, well, to be honest, will be constantly evolved and trained to deliver on expectations. Right now we're fortunate in the way that it's built to be almost as if the model was built for each and every single investor, specific to their criteria. But there's going to be certain nuances in different sectors. Some things we don't necessarily have a good grasp on. Or things are more like deep tech. That there's traction is very different in terms of when they're raising for different rounds.
Right.
Biotech, those types of things. So there's certain sectors that require a significant different model with different data inputs. But for your traditional VC backable startups, especially any kind of level of tech or CPG, those ones we have pretty strong confidence that will yield solid results.
Okay, so the bit you were saying before, the key value add for VCs that are kind of big brands, they've already got plenty of deal flow, is it's like high signal to noise ratio, right? What's the narrative for the venture firms that are not big brands? firms that maybe not everyone knows about?
So there's a lot of great, firms out there. A lot of what I call like poorly marketed capital pools. Billions of dollars, being managed by great VCs that chose not to be big on Twitter or LinkedIn in terms of influencers. A lot of deals happening within their networks. And so the value proposition there is getting access to deals that are far outside their network. There's a lot of amazing emerging founders that are diverse, that don't necessarily have the broad network to access to capital that some other maybe previous founders or other founders that are easily identifiable and that are building great companies but are truly struggling to get access to the right people. And this is something I dealt with when I was my very first company. I was in San Diego back in 2012 trying to raise capital for a marketplace, and it just couldn't get in the room with the right people. And I was pitching all the wrong investors because that's all I had access to in my network. Ultimately, we're growing 40% month over month. We had $40,000 a month in GMV, and we just could not get in front of the right VC that was going to be excited to work with us, because we just couldn't open those doors. Cold email, all that kind of stuff just went to the bottom of the list. And so we act as effectively that warm intro, that partner to that VC that pre-vets deals that are specifically related to that VC, and align it with founders that we think this is going to be a smart money play for them, to make sure that they're going to get the capital they need to build out their future and their future product, and create a great return for VCs.
I think the natural reaction to this as an investor is that it's going to lead to a bunch of spam. That's the fear, right? There's services out there that have basically crawled the internet and added a lot of VCs and their personal information, including their email addresses, to the web. I get it, but why would people wanting to sign up for something? You go and sign up for something like this. I think it's natural to be afraid that there's just going to be an onslaught of interest that maybe isn't relevant for you, which is just more work. And also, it sucks. No VCs want to reject companies. It's the worst feeling ever, right? These are people passionately working on something to improve the world. How do you handle the spam dynamic?
I'm excited you asked that. When we talk about how the platform was originally designed, that's ultimately what it led to. It was too open, allowed founders that didn't do their homework to basically have direct access to these investors. And based on the data and what we collected through that experience, what we've seen on other platforms that ultimately never succeeded, was the spam factor. It's just more noise. It's just another cold email as far as how the platform was originally designed. And so what we've doing now, acting as effectively the middleman in terms of vetting these deals prior to them getting in front of VC. So of the hundreds of companies, we're not sending you a newsletter with, hey, check out these 20 companies that we think are cool, and just more noise that you're not going to click on. No, we're looking at, again, having a relationship with the VCs, knowing what they're looking for. And then when we send that email, we're talking about sending 1, maybe 4 emails a month. We're not looking at sending 20, 30 deals a month and just adding to the noise. So if the deals that pass our vetting process, we're looking at a few a month, maybe in the dozens a month once we start hitting scale, and maybe more there. But again, those are all going to be different categories, different sectors that most VCs that are on our platform that gone through our entire intake process. And like I said, we'll get 1-4 deals a month that are hyper specific with an explanation as to why we feel they're a fit to your thesis, and what you're looking for. So there's that human intelligence and that human layer there that allows us to go above and beyond in terms of that expectation, as opposed to just, again, trying to automate everything, make it a SaaS, and just allow free for all, which many companies have tried before, and it doesn't lead to success. It's basically the same thing as cold email.
I also love the double opt-in nature on the platform. Do you want to cover that?
Yeah, so we're removing the ability for founders just to have direct access, and vice versa. So effectively making sure that both parties opt in for this, because if you're a founder and you want to help fundraising, there might be a really great VC, but they've invested in a competitor. So you don't necessarily want your company information, your proprietary information, your debt getting in the hands of that particular VC. So that's vetted before those intros are potentially made. And for the VCs getting deals, we reach out to that VC, we show them the material and information about the deck, and hey, we recommend that you take a meeting with this company. but you might not have interest. There might be something that, like, hey, we did a similar investment, or hey, we don't like the space, whatever it might be. And then that founder never gets any notification of rejection. We basically, log that into our system. We might alter the, algorithm or some of the information in profile to make better fits, but that, both sides are protected in this case. So that founders are not wasting their time spinning their wheels, sending 10 follow-up emails that they're not going to get an answer to. And, VCs are not having to deal with, trying to explain their reason why they turned them down, or, feel like they have to ghost them.
Got it. What kind of information are you giving the investors when you're saying, hey, we like this one, have a look?
So it's twofold. It's one, there's a very simple introduction, a couple bullets of what we think makes this deal sexy, and then a link to the deck and a link to their profile where it's like all encompassing. And if they request to move forward, that VC is going to not only have the option to meet with that founder, but also once that meeting happens, that founder can unlock their data room, which we've already pre-established and already have ready and due to our pre-vetting process. So all the data room details and information that at least probably 70 to 80% of what a VC would look for is already going to be ready to go, and for them to be able to do a deep dive. So the founder has control of when that information is released, considering the progress of the meeting.
Okay, so unfortunately, I'm becoming an old VC. And I only know that because some of the younger folks keep reaching out as they're starting their funds and asking for advice. And I share what I can. I'm still learning as well. A lot of them are asking for LP intros. And I've been using Thunder as a solution for that. I'll say, look, there's a bunch of people on Thunder who are looking to invest in funds. Go there. I think their heads explode sometimes, because the way you find most LP introductions is through a series of emails. It's a chain.
Yeah.
Do you want to cover the value in this for LPs?
Yeah. So as far as our new product that's launching, we're allowing high net worth individuals, family offices, and other forms of LPs, funds of funds, to have access to GPs. We've been focused primarily on the founder to VC conversation, but I'm glad you brought up the LP to VC. So effectively, LPs put in what they're looking for. Pretty simple information to provide, whether they're acting as an individual, and that information is able to go into, again, our matching specifically for LPs to VCs, which we haven't touched on. But effectively, GPs decide whether they're operating out of a closed fund that's they're not longer raising fund, or they're actively raising a fund, or they're deploying capital out of an active raising fund. And we ask different questions based on what fund they're on, if they're actively raising. And if they're actively raising, there's the opportunity for us to match LP to GP, based on what type of fund they have, what's check size, what they're looking for, what exposure, what markets are getting exposure to that LPs want. And then we're able to make exact same process as founder to VC in terms of making those intros and those recommendations in the exact same process. So that's something that we're going to be scaling up in Q2 to be able to bring that together.
So this is a big behavioral change for a lot of folks, right? I mean, you're talking about nothing new in the sense that founders are getting in touch with GPs and GPs are getting in touch with LPs. But this has historically been done just over email, right? Whether it's a cold email or a warm email or a message through LinkedIn or whatever else. It's basically some form of digital messaging platform. Mm-hmm. And it's bespoke. Have you gotten a lot of pushback on the behavior change here? What are you seeing with people reacting to this? What skepticism do you bump into?
I'd say on the skepticism side, a lot of people just, hey, I have a system, I do deals. Why do I need this? And a lot of the reason that we come back with that is, popular term in VC, FOMO. You don't know what you're missing out on in terms of the deal flow and opportunities that we're going after and we're bringing to the table. But then something I think is really interesting, just the market dynamics as a whole, is you're starting to see significant wealth being generated for the first time, as millennials and some Gen Zs, coming into money, whether they worked for a big tech firm for a while and, their options invested, and now they have 7 figures of capital and they don't know what to do with it. Or maybe they gambled in, crypto and, stock market recently, made a ton of money, but now they're coming to terms like, this market going south real quick. I don't really know how to manage this. Maybe I need to put my money into someone, who knows what they're doing. And specifically for me, is like I got into angel investing, and once I figured out how to get deal flow, I was just massively overwhelmed. It was a full-time job to make the right bets. And rather than deploying individual $25,000 checks, I was like, maybe I should just throw my money into a fund that kind of aligns with what I believe in and follows my investment strategy than trying to do this myself. And that's ultimately what I did. And I think we're seeing a lot more of those types of people come to the market, but they don't necessarily have the connection, especially like top tier funds. You can't write a $250,000, $500,000 check and get exposure to big funds that have been out for a long time. You get exposure to great funds, but you might not know who those people are. You might not have access to those networks, and to be cold emailing as an LP, you probably get an answer, but who knows if it's a good fit? Maybe that GP has certain requirements. So we basically take care of that unknown aspect and make the relevant connections when the time is right and both parties align. So that's how we basically are taking advantage of what I think to be a big market shift that a lot of people aren't talking about.
Okay, but on the surface, there's a handful of other sites that look just like this in the market, and I think they have the same mission. It's to facilitate the matching of investors and people seeking capital. But there's a big difference. So how are those folks, those other platforms, how have they affected your ability to kind of get the message out here? Because I would imagine anyone who's been on one of the other platforms is having they've figured out that it's a spam machine. And I would imagine you're being met with hesitation.
Yeah, because people put us in that bucket, especially now with the the MVP still in the market. By the time this comes out, the new product will be out, and that problem be resolved. But that is the initial concept, and that's why we have changed how the product experience will work, is to eliminate that negative connotation of spam and the perception that it's just more noise. We listen to the audience, we listen to both sides, and from founders, VCs to LPs, and we feel that we're taking a very difficult approach, but with the right technology to make sure that it scales, without having to sacrifice quality of the genuine connection. So using AI is great, technology is great, but left to its own without any kind of human intervention or intelligence or relationships involved, it ultimately becomes just like every other product out there. And so that's why we went the broker-dealer route and are focused on success-based outcomes as opposed to a SaaS free-for-all, where anything and everything goes and mostly just turns into noise and spam that gets neglected.
Okay. Are there geographies where this has been more relevant as you're looking at the data and the patterns? I know people from around the world can kind of tag into this, but not all investors invest in other geographies. What have you learned?
So at this point, we are predominantly focused on the broader U.S., Canada. We do see some deals coming in from Latin America and Africa and Europe. But from a prioritization and systems process perspective, we're focusing on U.S. But we are seeing a lot of founders outside of major markets that are being attracted to VCs that are either in other markets and or the top markets. And so being able to make those connections, again, solving that you don't know who you don't know problem, and making those types of introductions to founders that are building great companies are just outside of the traditional tech ecosystems, which with the massive work from home movement that we've seen is opening up doors. And it used to be a talent issue. If you weren't in the top market, you didn't get the top talent. But with a lot of top talent moving all across the country and having that freedom to work wherever, that's no longer a restraining factor. So we're capitalizing on that trend as well.
Okay, right on. So look, I know there's a huge roadmap for this, right? You've got an extensive plan here that you're putting together. Where does this go in the next 3 to 6 months? How does this product evolve? What should early adopters be expecting?
Yeah, as of right now, we're really optimizing our flow through due diligence and finding the best companies. So both sourcing and vetting deals. So that's going to be our primary focus. We'll be rolling out the GP to LP functionality, allowing that to kind of grow organically and identify room for improvement. Probably 3 to 6 months, we'll be tripling down on that. That area will be allowing it to happen. We'll be focusing on making some of those deals happen so we can continue to evolve and adapt the platform to meet those specific needs. And then beyond that, we're looking at being able to close and the dozens, if not more, deals in terms of companies to VCs, just kind of given what we've learned over the last 6 months. We feel we have the right pieces in place, and our BD license coming together. We'll be able to execute on that front. And beyond there, what's something that we haven't touched on is some of the data that we're collecting. One of the integrations that we want to make in terms of the roadmap is third-party connections, similar to like a Zapier type API type connection, where founders are able to connect certain data sources to Thunder to auto-populate their monthly traction updates, so that we can have trending data over a period of time. Because a lot of founders that come, they sign up, but they're not necessarily ripe for funding just yet. They need a couple more months to kind of prove out their traction, solve some of the problems, maybe find product market fit, or at least get closer to it. And so, our platform will enable them to have that information auto-populate, if not, be able to manually populate. And so we collect all different types of KPIs that are all standardized, that some will be more relevant to other different types of industries and to VCs, and that information will be trending over time once they make that connection. So trying to streamline and simplify that process. And then once they hit certain thresholds, that recalculates the algorithm. So once they hit that 100K ARR or $1 million ARR, whatever type of business it might be, whatever those KPIs might be, the algorithm gets updated, and that might bring certain matches to the top that weren't there before, to which sends signal to our team to reevaluate and reassess, that company that we might not have run through our process prior, and be able to do so when the time is right, and or alert the right VCs to then take action independently, without waiting on us to vet them or put them through a process, giving VCs options to kind of see some of that progress.
Jason, can you give us an overview of your background? I think that gives a lot of color on the business, but I think it'd be helpful to hear more about how you kind of arrived here.
Yeah, I guess I can. It's a long story. I'll try to keep it somewhat reasonably short. But always a founder, always a kind of entrepreneur from the start. Since I was 19 when I started my first business in college, really hated going to school and not really know what it all meant. So I wanted to apply what I was learning and started a small business to do that. Ended up becoming a full-time career for 8 years or so. Ended up selling that business because I just wanted to move on to bigger, better things. Worked on a startup, raised a little bit of angel funding. That was the story I was telling earlier. We just couldn't raise the venture capital that we needed. Had an acquisition offer, come in from Kodak, which was pretty awesome to think about back then. It was more of an acqui-hire type opportunity, but it's something excited to explore and go through that process. And basically, as we go through the due diligence process, Kodak had some internal shakeup things, and basically that deal ended up falling apart in the last hour, which was kind of unfortunate. But learned a lot through that process, in those negotiations and those discussions. But ultimately, ended up moving out of San Diego into New York. I wanted to move a little faster. San Diego is a very chill, calm, let's go surf environment, and I was more of like, I want to build big shit and cool shit and do bigger things. And moved out to New York. Joined a company called Liquid Sky as their chief marketing officer as a first hire. Me and the two founders. Ended up helping them, taking them to raise $12 million and getting to 1.5 million users in 130 countries on a cloud gaming technology, similar to what's out now called Luna and Stadia, which is built on pretty much similar technology that we had launched back then. Amazing experience. Took us from those three of us to about 40 plus employees. Building really complex technology, working with major, Microsoft, Walmart, Samsung, and other big brands. Ultimately, had the point where, we got acquired by Walmart, which I can kind of dive into a little bit more in terms of that acquisition experience and dealing with bankers and whatnot. But ultimately, as we got acquired, we went on to build Walmart Gaming, which was going to be this amazing, awesome experience. Walmart was really on the bleeding edge of this type of stuff and what was going on behind the scenes. But a couple of weeks before launch, things changed when Amazon was tripling down on same day delivery. Walmart wanted to compete, and they reallocated our massive 9-figure budget to next day delivery instead. Kind of hurt us quite a bit. But as the Silicon Valley show says, it got put up on the roof, which was interesting experience.
That's a funny reference.
Yeah, I was like legit on the roof, like on the floor above our actual main offices of Walmart. They put us in the Regis. pretty funny, but ultimately, big corporate wasn't my life. It wasn't going to be, for me anyways. Ended up joining a startup out of Kansas City, talking about being out of major markets, learning about that ecosystem. It was a scholastic esports company bringing, esports to schools all across the country. 7 guys eating ramen, doing like 100K a year. Ended up getting them to, about the time I left, raised $11 million Series A, $1.4 million in a quarter, revenue, and really scaling them up to 65 people, in the company. And then ultimately just going back and forth to Kansas City just wasn't going to work. Founders and I kind of saw, differently how things should play out. So it was best that, I move on. And then that's when I reached out to you, Mark, to kind of see what's going on. I was angel investing, seeing what's going on in the market. And, I'd actually signed up for Thunder before talking with you, and doing so ended up, really believing in the mission, having dealt with bankers, having dealt with M&A, having dealt with raising, several $1 million across multiple different companies. I advised for another company that raised $20 million in their Series B. And so that gave me a lot of exposure to how this world works, both on the investor side, the banker side, the M&A side, and the founder side. And I thought I was, the perfect combo to really bring this product to, fruition and be grossly different than what's been in the marketplace to date.
Yeah, I mean, so we, for Thunder came out of our Foundry at Interplay, right? We had done a really crappy MVP by the time you showed up, just to kind of test out the concept because we believed there was something here. How did you think about joining an existing company as a founder? I think the psychology of that's fascinating.
It's interesting because it's something I've dealt with pretty much at every decision, in the last several years, whether it's, inviting someone into my first company as a founder and dealing with that experience and the struggles that we wasted so much time on in terms of negotiating equity and all that kind of stuff is, equity is an important discussion to have, but also it's like equity is worth nothing until it's worth something. So, being smart about those types of negotiations and really focusing on chemistry and good relationships. But yeah, just like having been a founder, in the past, and then, joining as an executive and others, one thing that I really realized in terms of my core strengths is I was never the original idea guy. I'm always the guy that turns a good idea into a great business. And that's kind of been my core strengths. And I've allowed the ideas to evolve, similar to Thunder, it sparks something with me. And I find the way to kind of make it relate to me and my experiences. And then I'm able to draw upon those experiences, which is exactly what I did. Liquid Sky, in terms of bringing gaming to any device, that was a huge pain point to me as a kid, not being able to keep up with technology when I was a kid with all my friends. Generation esports, bringing esports to kids all across the country with legitimate curriculums, things I could get behind, things I was really passionate about that I was able to grow and evolve. And same with Thunder, having dealt with all my personal experiences in raising money in M&A, this is something that I could truly be passionate about and jump 2 feet in, and know that, I might not be, the original idea conceptualizer. I'm not getting, the 100% ownership and blocking away other people, but it gives me, autonomy to, make my own decisions, bring in the right people, build teams, and develop out ideas that, in every previous situation I've been in have, built up great companies that, either raise a ton of money or get acquired.
That's totally spot on. You've definitely taken this to the next level. You had some clay to mold, but you've molded the hell out of it. Okay, but you've been an entrepreneur for a long time. Is there a bit of wisdom, a lesson you've learned that would be helpful for entrepreneurs or kind of maybe a little earlier in their cycle? Some wisdom you want to share?
Having been affiliated with entrepreneurs my whole life and just being so close to so many of them, that's basically how I am who I am today. Just the relationships I've built with fellow small business owners, entrepreneurs. There's always this common theme, especially for new entrepreneurs, like they want to be their own boss. They want to call the shots. Maybe they're leaving a corporate job, or maybe just traditional life wasn't for them, and they feel charting their own path is the right way to be their own boss. But what they don't really realize is your clients or your investors are actually your boss. You're serving them day in, day out. It's you're not necessarily working less hours. You're working more hours. You're making less money. But it's got that vision of you feel you're capable of bringing more value to the world than would otherwise be possible if you didn't pursue it. And you ultimately do get to call the shots, as the founder. You get to choose who your investors are. You get to choose who your clients are. So there's a level of control and autonomy there. And so I always try to remind, founders of that, because, if you're just coming in to be your own boss and to chill, it might not be the, best path for you. Maybe there's other lifestyle type businesses to pursue, but, when it comes to like building a venture-backed company, you're ultimately, truly not your own boss in a lot of ways. You're still servicing your investors and clients on a day in, day out basis, and working harder for less, until you figure it out and you get it right, and then then you get rewards. But we all know how those success ratios work out.
Yeah, I mean, I think that's a really interesting concept. It takes a village, right?
Mm-hmm.
There's not a lot of going it alone, lone gunslinger, and building these new age companies, right? Everyone's got someone else they're dependent on, collaborating with. VCs have LPs. LPs have usually have investors upchain from them. It's a group collaborative thing, and you have to be able to work with people. You have to be.
Well, that's why I joined, because I would not be able to take Thunder where it is today if it wasn't, working with you guys. It's something that like I mentioned before, I'm not the guy that does it by myself. Come up with the idea, build it from the ground up. I take good ideas from great people and turn them into great businesses.
I love that. You've also done a lot of M&A. Any big insights or aha moments you could share with folks?
Yeah, I kind of shared a little bit about the Kodak thing. For that was super early days, small transaction size. I sold my small business. Again, small pennies. The grand scheme of things, but lots of experience in terms of just making sure expectations are managed at those stages. But was the big story is I didn't get to talk about as the liquids guy. Samsung was our biggest investor in our previous rounds, and they had moved forward with acquiring us, and I was deeply involved in both the negotiations, setting up the data room, going through the due diligence process. It was called like all the different code reviews that we had to go through to validate that our code was legit, where it was sourced, making sure we weren't stealing anything. Just the significant amount of work that goes into not only just coming to terms as to, okay, why are we doing this acquisition and what's it going to be good for post acquisition, but all the work that goes into actually making a deal come together and checking all the boxes that have to get checked. Because once you come in with a decision maker, whether it's the CEO, the acquirer, or someone from the corp dev team, once those things are discussed, like then you just get the monotonous, miserable, boring stuff, just like checking all the DD boxes. And what was amazing is Samsung was going to work out really great. We're all super stoked. We had bottles of champagne. We had like all this stuff ready to go the morning of the acquisition. We had buses ordered to pick up our entire team.
Wow.
Offer contracts ready to go. We're like so excited. Ian, the CEO, myself, we were talking late at night, about, how much fun this is going to be. And then he gets a call. I think it was like 5 a.m. or 4 a.m. from Korea, whenever it was like morning time in Korea, because they just had a massive regime change in Korea at Samsung. I forgot the son of the chairman or whatever, the CEO, basically corruption caused he went to jail. And that was all going on during our negotiations. They kept assuring us everything's going to be fine. Everything's going to be fine. We're going to get this deal done. Well, just so happens the new CEO that has been in place for a couple of weeks had just gotten signature authority. And he decided that every deal on the table is dead and needs to go, to review. That was the morning we were supposed to close. Wow. Everything was done.
That's crazy.
Everything was done. We had champagne, like I said, we had a new office already leased with Samsung, ready to go, all this stuff, and deal falls apart last minute. Talk about pivot, just having to come out of that. Oh, we're got this whole new plan to go back to what we were doing, and having to bring in massive 6-figure, 7-figure B2B deals, to make sure that the lights keep on. So that was an insane experience. Huh. But that was working directly with the corp dev team and the senior leadership at at Samsung. And the next experience was, after we went through that experience, our board basically is like, well, we gotta sell, because Microsoft's coming in, Amazon's coming in, Google's coming into this space. We either need to shop our technology around to them or someone else, because we're not necessarily going to be able to raise the 100 million plus that we're going to need to compete with them, especially knowing that they're coming into the market. And so our chairman, to which I was not a huge fan of, and We definitely have had some better circumstances. Went out and brought in a banker to basically shop us around. And I have to say, there's definitely a good reason why there's some bad reps for bankers in the space. They don't necessarily understand, the technology, the VC, the venture capital world as much as, they should when coming into these types of spaces. And it ended up being where all the work that they were supposed to be doing was ultimately myself and, the CEO doing 100% of the work. And then more or less just taking up space in the rooms. And so it was a very negative experience that we had dealing with that banker, because ultimately it was me that brought Walmart to the table. I had signed a deal with them to do initial MVP, and then they ultimately came in and started talking acquisition. Once we were out of it, the NDA with Samsung, and that process started being handled by me and the CEO directly, to which our banker just had to have be in the room just to justify their existence, but ultimately wasn't there contributing. And so we went through that whole experience, negotiating back and forth to corp dev, and ultimately brought it down. Similar experience we did with Samsung. We had pretty much everything ready to go, and we were able to move pretty quickly. And it was a really positive experience. With the Walmart team, just takes a lot of time. I would say it was probably a year from initial conversation to acquisition, closing, moving into the Walmart offices.
What did you learn from that? As an entrepreneur going through the M&A process, any top tactical things? It sounds like you had a bad experience. Separate from that,
good and bad.
Are there one or two things? Yeah, but are there one or two things that you took away where you're like, okay, everyone needs to know this, and they don't know it?
There's a lot of things, like I mentioned, time. It's just an extensive amount of time.
Yeah, it's 6+ months typically.
Yeah, easy. The legal side is just as a founder, if you're in this process, there's just a ton of paperwork and things you have to have locked down and ready to go. You have to be extremely organized because as much as the decision maker might be totally cool with everything, legal isn't. And it's actually legal that you need to make sure you check all the boxes with and deliver everything to in a timely and effective and legible manner, and deal with all their dumb questions because they don't know how your business operates. They're not actually wanting this deal to get done. They're trying to find every way to kill this deal because that's less work for them if this deal dies.
And it's also their job to protect their client, right?
Exactly.
Yeah.
And so that's their perspective. So you have to, as a founder, not lose sight of that. You really have to win over, legal and corp dev teams, not just, the decision maker. Decision maker could ultimately be on time. That's your leverage. You use that person to push things forward when legal is pushing back on things that are unreasonable. Another thing is managing your team, because deals fall through all the time. Like I mentioned, I have 2 deals that have fallen through, and I haven't talked about the acquisitions I've worked on in terms of acquiring other companies in my past. Deals just fall through all the time, and you can never just assume a deal is done until it's done, and you have to keep the lights on. And in 95, 99% of the time, you cannot tell anyone. You cannot tell anyone on your team. You have your senior executives and maybe any key personnel that might be involved in terms of the due diligence process. But if, just by you talking at a bar about what's going on, or you talking to friends and family or any of your employees, that could kill a deal.
Yeah.
And then you have to be super careful about the information you divulge. And it's exhausting because your employees come to you and they're like, we got to work on this. We got to work on that. Let's do this. Like, why aren't we doing this? And you're like, I can't tell you, and you got to find a way to make it sure that they don't get discouraged or quit. We had 2 people, quit during M&A activity because they were so frustrated with, me and the CEO not moving forward with some of their ideas because it was a direct opposition of the acquisition. And we could not tell them. And it was so difficult, and 2 people left because of that. They weren't key employees, but it was still frustrating to
probably soured relationships you didn't want to sour.
Exactly. We're cool now. Once they saw everything happen, but it's still frustrating to do that. And a lot of founders just don't know about that. M&A is a grueling process.
Yeah, it's a psychological meat grinder. I've seen people have really hard times with it. It's very stressful. There's a lot at stake. The whole entrepreneurship thing is too, right? You've got a lot of higher suicide rates. You've got a lot of challenges in the entrepreneurship game from a mental health perspective. What do you do for mental health? Any wisdom you have on that you think is important for founders to kind of pick up on, whether they're in M&A or otherwise?
I think something that I can speak for myself and the other founders that I'm really close to that build great companies. You really need to take care of yourself. What matters to me is staying physically fit and just making sure my body is functioning properly. Trying to eat clean as best you can. Definitely not perfect by any means, but knowing how your body reacts to certain foods and making sure you're putting the right things in you so you can function properly throughout the day. I'm an exercise guy. I'm at least working out 3 to 4 days a week, if not 5. Training sessions and running just to make sure my body can keep up with long hours, exhausting, situations. It's important to make sure your body's taken care of. And then from there, from a mental perspective, having outlets, having people that you trust, that you can candidly speak truth to. A lot of founders, they feel alone because their VCs or investors, you might be struggling with something and you want help, but you feel like you're giving bad signals to the VCs if you tell them actually what's going on behind the curtains or how the sausage is being made. And if you don't have friends, like-minded individuals to share those experiences with and have, candid feedback sessions or radical candor from people that care about you and don't just care about your company. Because that's the other thing is, talking to your employees or talking to your investors, their incentives, they have different reasons to give you different feedback, because they have skin in the game and they want you to do a certain thing that may or may not be in your best interest. Right. And so it's important to build a friend group or a network group that, you have access to enable that. And so I'm part of different groups that, allow for those types of conversations to happen.
That's why a lot of folks join Venwise. I mean, that's kind of trying to make it a less lonely journey. It's kind of what 100%. They specialize in.
Yeah, I fully support those peer groups. And the last thing is, something I personally do that I've only done a few times, but have been absolutely transformational when coming to, a fork in the road where tough decisions have to be made, and you have a mental block. Something that I've explored is, psychedelics like ayahuasca or mushrooms. It's, something that's becoming more commonplace, but it's helping.
It is entering the mainstream.
Exactly. And it helps release, some of the stuff in your subconscious, things that you might be blocking yourself without knowing. And I've made some of the most important decisions of my life coming out of those sessions. Coming in from a very more of a specific mindset, not just trying to have a good time type thing, but actually trying to unwind my brain, get into my subconscious and try to figure out difficult decisions that ultimately the decisions are within you. And most advice you get from people is just you talking and then regurgitating back to you. It's so it's a way for you to access your thoughts that are in your subconscious that otherwise would be very difficult to get. That helps release some pressure on you. So going back to mental health.
How about as a parent, right? You've got a newborn at home. Mm-hmm. Most people would be pretty scared to be starting a journey when they've got young children. How have you been managing that? Any particular tactics or advice on how that works for folks? Yeah, and personally, I'll throw in, I started Interplay actually when my daughter was 1. And I had friends and family who thought I was crazy, but it's what I wanted to do for my life. My wife was supportive, so I went for it. What have you figured out since having your child about being a founder with young children?
Having a great wife. Is a great partner is crucial. That understands that if I wasn't to go down this path and I was to go down the safe path, I'd probably be more miserable at home. If I were to stay at Walmart or something and play it safe and have the good insurance and all that kind of stuff.
Right.
My wife knew how not happy I was in that situation, and I come home much more refreshed, knowing that I'm kind of in control of my own destiny in a lot of ways. And there's certain things I am particularly fortunate enough to where I have built enough up before going into a new venture to where I'm able to have help at home, whether it be nanny or my in-laws, being able to have support at home to know that my child is safe and taken care of, but also knowing that from 6 to 8 p.m. I am home 100%, nothing else distracts me. Completely present with my family for dinner and putting down my daughter, and then spending quality time with my wife, is super crucial. Because if I'm not stable at home, I'm not going to be stable at work.
Mm-hmm.
And so
it's wise.
And just being completely transparent with my wife and making sure that, she knows what we're getting ourselves into, and then me making certain commitments to her, knowing that I will not falter on these regardless of the certain, situations, but knowing that she's going to give me a lot more flexibility, to lean on her, when I need it. And she's also, full-time employee for a large corporation. She's senior director. She manages like 30 people. Like she's, busy in herself. So I have to respect that as well and make sure that I pick up the slack for her. So it's a very important family dynamic that, fortunately, we have some help. So that gives us a lot more flexibility that would otherwise probably not be possible. But that was by design, to make sure that we had that kind of comfort and flexibility before doing something like this.
Well, incredible you're making it all work. It seems kind of easy for you on the outside, but I'm sure it's not always easy. Hey, Jason, thanks for being on. This was awesome. I'm sure there's a lot of insights in here for folks, and I appreciate you.
No, I really appreciate you having me on. It's been great. And thanks for bringing me on the journey.
So if it's not obvious at this point, I'm pretty fired up about this project. I think there's a real potential for Thunder to have massive social impact by making it really easy for entrepreneurs to find the capital they need. This is where I do my pandering, which I'm forced to do by my producer, Will. If you like what you heard, please hook up with a like or a 5-star review, and feel free to share with a friend. You can find me on Twitter @MPD. And to hear more of my conversations with innovators, subscribe on YouTube, Facebook, or any major podcast platform. Just search for Innovation with Mark Peter Davis.